Welcome back. You're still watching Smart Money on CNBC-TV18. We're talking about the big themes to watch out for in FY24 since we have put FY23 behind us. And tomorrow we start a brand new fiscal. Gurmeet Chadha of Complete Circle Consultants is with us and he's been giving us some themes. Gurmeet, another theme that you like is FMCG, and within that, the best of the lot, ITC. But you know, ITC was, was one of the strongest players last year. It sort of had the last laugh after all those memes that came through on ITC not performing. But is there still a lot more scope to go? Do you think a lot of the good news is in the price?
So if you see, Sonia, despite this year being very challenging, I think the FMCG index is actually up. If you do today, probably more than 3%. And to credit to ITC, the EPS growth has been 23-24%. So I think while the stock has done well, we have to look at how the earnings has panned out. The volume growth in cigarette, which is their core business, has been very good. In fact, last 3-4 year average is now in mid-single digit, high mid-single digit, which is not the case. They were struggling on volume and it was basically pricing-led growth. Also, I think the tax regime was more punitive. We have not seen significant hikes there, which is a big overhang. Even the current hike in budget translated to around 1%, which is good. I think the FMCG business is doing phenomenally well. I think they're on course to cross 20,000 crores. If you see the FMCG business, there are very few companies who do 20,000 crores. So if you remove HUL, there is Asian Paints, there is Titan. I think, and then you have ITC. So very few companies actually manage that kind of numbers. And improvement across, I think, the product lines is there. It's taken them 12, 13 years to build this business. Even at current price is about, I think, 22, 23 times. So it's still reasonable. The dividend yield is still 4% despite the run-up. So, as I've been saying, this is a time where you look at, boring businesses, reasonable valuations, good cash flows, getting back to textbook. Another name which I like now and for a while has been Tata Consumer. Great. I mean, we've invested in since the days of, it was known as Tata Global Beverages, 4 or 5 years back. So that's the segment we are seeing. And I think you will see there's a good rabi crop. I think the wheat prices also should hopefully soften. And that should give some leg up there. Also, if you see the HUL commentary, I think they understand rural markets better than anyone. There was a sequential recovery in Q3 in some of the rural markets, and this being an election year, I think the spending will more pick up. You will see more, agriculture-related incentives by the government, state and central. I think that should also be a decent tailwind.
All right. So ITC is a stock that you like, and of course, all of these data points that you made are on the name ITC. Got that. The other space that you like, the last and final theme, is power and energy. And within that, of course, this is a big focus area of the government as well. Tell us, what are the triggers and what are the stocks that you like here?
So I think electrification has started really bearing fruits, and this is, as I said, most of the themes are long term. While we are talking about FY24, but the idea is to look at these things from a long term perspective. We are looking at multiple spaces here. So if you look at renewable energy, that's almost now 12% of your incremental energy generation. I think the share will continue to go up. So we like Tata Power. I think it's one of the most integrated players. Which is there, which is on transmission, on the coal, Mundra, etc. Then you're on the solar panels. They're one of the leaders. EV charging ecosystem. They have a 40% market share. Again, reasonable valuations. Good turnaround in the company last few years, and they have a clear goal till FY25 on what their targets are. You'll probably see more monetization in the renewable arm there. Electricity, we like NTPC purely because of valuations, but NTPC, has been inexpensive for a while now. So that's another one which we like. We also like the entire ecosystem around it, which will translate to energy, which are some of the new energy names, like the ethanol plays through Praj, which I think there's a clear E20 goal there. And there's so much work happening even in compressed biogas and other spaces. So this ecosystem, we think, is seeing transition, and probably some of the old guys which were in traditional sources are making good strides. So you don't have to really look at outside in terms of the new players in this space.
Okay, all right. So that is on NTPC and Tata Power. Now, wanted to understand from you in terms of earnings upgrades. Do you see a lot? Because, names like NTPC have not been great wealth creators in the past. There have not been major earnings upgrades. There are, of course, a lot of government regulations as well that have, kept a lid on these power stocks. You think things are any different now?
I think that overhang will always remain with the PSU. So yeah, I think that's something we have to live with. That's the case with most PSUs. But considering the valuations in single digit P, great dividend yield, almost I think more than 5%, could be a decent, so as I said, defense is as important as attack in challenges like that. Preservation is extremely important. And you can look at, as I said, some of the more growth structural players like Tata Power, like some of the other names. I even think gas as a space after the unified grid is interesting to look at. We'll probably want to wait more and see what's the impact it has on the city gas distribution space in terms of pricing and more GAs getting added. Also, I want to look at what is the OPM mix in terms of how they're sourcing energy, because that has been going up, which is the non-OPM sources, which has an adverse impact on margins. That's another area for us, which is the gas space, which we are targeting. So overall, this basket, as I said, we are tracking across both gas, ethanol space, traditional power generators, solar, EV ecosystem,
Okay.
and so on and so on.
All right. Finally, before we let you go, one of the big talking points this week was Reliance's demerger of the financial services business, right? And a lot of brokerages believe that Reliance is going to be a big disruptor in this space. It's going to give a run for their money to the traditional NBFCs and the fintech companies because of how, it has an asset-light model. It has a very strong balance sheet, unlike what a lot of fintech companies have. Do you see this being a game changer for Reliance Industries? Because the stock has been under quite a bit of pressure. Now, since you're talking financials and you like that space, do you see this news as a game changer for Reliance?
I don't think it's a game changer, but it will definitely be a bit of a disruptor. See, it's starting at what 6 lakh crores of Reliance shares on Treasury, which increases its ability to work on its net worth. Right, it already has an NBFC license. It has a huge presence in merchant outlets to retail and stores. So technically, let's say if you look at the total addressable market, if they can empanel like let's say million merchant and the working capital limit of 3 to 5 lakh, you're talking about 3 to 5 lakh crores of working capital related finance they can do. Huge database on direct to consumer facing, huge database on the geo ecosystem side. So I think the opportunity would be both in lending, opportunity would be in distributing financial products, which is mutual fund, insurance, etc. Opportunity would be in terms of having their own asset management or insurance arm at some point of time. And very well capitalized. So obviously it will add some value, but would probably have more. And India is at a stage probably you need 5 more HDFC banks and 5 more ICICIs and Geo Financial for the journey we are in. So I think it will be more an enabler there. I think the bigger trigger for Reliance, in my view, would be more monetization. See, one concern has been, again, rise of debt and capex, because that's the nature of the business they are in, right? Whether it is the energy initiatives they are taking, and some concern around ARPU. So I think if over 12 months, I think the better triggers would be maybe a geo listing on, which is the telecom vertical, and some monetization in the energy space. I think that to me are bigger triggers for Reliance to address that free cash flow thing it's struggling with. And it's always been like that. It consolidates, does capex, monetizes it, and the pattern.
Yeah. Okay. All right, Gurmeet, thank you so much for your thoughts. Appreciate it. And all the themes that you spoke about as well. Wishing you a great FY24. I'm sure it'll be as good, if not better, than FY23. Thanks a lot for joining in on Smart Money.
Always a pleasure. Thank you.
Okay, with that, it's a wrap on this edition. Keep writing to us. We love receiving feedback from you. Have a great weekend. We'll see you again on Monday.
Powered by